Hey traders, in this video I'll be talking about the concept of imbalances in trading, and this video will probably be I'd say one of the most important videos you'll ever see in your trading, as I think that imbalance is one of the most powerful trading concepts, and also probably one of the most straightforward and simple to understand. And I think that a lot of you guys can become profitable or become even more profitable in your trading by just understanding price imbalance. So in this video, I'll be talking about this concept of imbalance. It can otherwise be known as price imbalance, price gaps, liquidity void, liquidity gaps, all this terminology. But pretty much we'll cover what imbalance is, then how to spot it, and then eventually how to incorporate it into your trading and how to form a strategy upon it. So, okay, let's just talk about this recent example. In this video, we'll just be going into pretty much all you need to know about imbalance for your trading. So, imbalance is essentially when we have a candle, right? We have a candle that looks something like this, and we usually have a wick, right, on either side of the candle, and then when we form our next candle, we'll usually have a wick, and then this is a bit laggy right now, and then another body like that. But let's say we also have a wick down here and a body down here. And then in this case, there'd pretty much be no imbalance because you can see the wicks of these candles fully cover up the body of the center candle. So pretty much price has reached all ranges, pretty much reached all the levels inside this range. So pretty much what an imbalance is when we have a body of a candle and the wicks don't actually reach into the whole entire body. So they could maybe only go up to this level and would reach to this level, and this wick would get to here. And then everything in here, which is just an empty body, would be a price imbalance. So let's just take a look at this in the chart and look at an example that just happened yesterday and how I've been trading on it. So here, this whole thing is a price imbalance. So if we went back in time and took a look at this, you could see that, let me just remove this. You can see that this massive candle that came up had this massive imbalance starting here. Right, this is where the wick ended, and then all of this was just empty body. So when we play the next candle, what does it want to do? It wants to come down and start to fill out this imbalance, but it doesn't fill out the whole entire price imbalance. So what did we form now? Well, we pretty much formed this whole entire area of imbalance. And the thing about imbalance in price or liquidity gaps or voids is pretty much price wants to return into this level to fill out, or pretty much fill out all these orders and get people in the market who wanted to get involved in this level but were not able to get in here because of this massive move up, which left them behind. So pretty much that's the logic of imbalances. And pretty much what price does is, it tries to go back into here to start to fill this imbalance. And again, we're filling more of this imbalance out. And then we create an order block, right? But eventually, now we still have this area of imbalance, right? So what does price want to do eventually? It wants to get into this area to eventually fill this area of imbalance out as well. So as you can see, by just drawing out this imbalance, we can already anticipate where price is going to want to return to, regardless of if once it fills this out, it's going to move up or just continue lower. But we do know that price at some point, maybe not soon, if this uptrend is extremely strong, will want to fill out this imbalance. And as you can see again, right, we formed an imbalance here, right, this large imbalance, and then we went down to just take out this imbalance, right? And we just wicked most of it, right? But we still filled it out, and that's the point of imbalances and how you can just trade and become profitable just based on imbalance, because it's something that just occurs all the time in price. And yeah, so let's just play this out. Yeah, we formed an imbalance here and price returned to fill it out. So most of the times you'll see imbalance occur over and over and over again as price plays out. And just like everything is fractal, if I go on the 15-minute, you're going to see different candles, right? And different imbalances. So now if I go on the 15-minute, you can see like this candle got much larger, right? The 3 candles here became this one large candle, which now has this large imbalance. But now let's go back to the 5-minute so we can just take a look at what happens. We'll just have this play out. So we continue to create imbalance and fill imbalance, and usually we don't have the thing about imbalance is that usually price will immediately go up to fill out imbalance. But a lot of the times, and the times where you want to be trading imbalance, is when there's an imbalance that's been left behind by the price action, and that will give you time to anticipate a trade based on it. So see, we formed an imbalance and then we immediately filled it, right? You could have saw this on the 1-minute and then you could have traded that already. So there's so many trades that you can just take by imbalance. And I took this trade actually because of imbalance, but also the concepts of liquidity that I went over in my previous video. So we took out liquidity up here with this candle or these candles, and now it looks like we're going to trade lower, and I entered here on a short to fill out all of these imbalances here. You can see on the 15-minute down here. But this was more of a play on liquidity because retail was thinking this was our trend line. So what was price mostly like going to do? Go down and take it out. And that's what we did. And we formed all of this imbalance. So obviously we're probably going to come up. But like I said, imbalance does not need to be filled immediately, just like as you can see here. And when it isn't filled immediately, then it becomes a powerful way to anticipate where price is going. So now price will most likely come up to fill these imbalances before it can move lower to fill these massive ones out. So yeah, price does seem to be moving higher. And then yeah, we had a massive imbalance here, which was later filled out. And imbalance is usually created in strong impulsive moves. And look, we just created these massive imbalances down here. But why am I not looking to go long here and I'm looking to go short? Well, it's because of these imbalances left behind that still need to get traded into. Yes, we are eventually going to need to trade into these imbalances, but we also have to take into account liquidity and market structure. So at this point, I was looking for some of this. I was looking for this imbalance to get traded out and for us to trade back into this order block. And we traded just up into here, which was pretty lucky for me because I placed a limit order there for short. And pretty much I can just play the rest out. We form imbalances and then fill them out, but the overall trend is still we're moving lower. Yep. And I anticipate price to trade all the way down into this level, which will be my first take profit. And then likely we could just bounce off of this level. Or we could go down. If we bounce off this level, we'll probably have some type of accumulation or something like that. in this order block, but there's also imbalances down here and price gaps, which price could come down to here. But remember, imbalance has to be considered with price structure and market structure. So now let's talk about how to pretty much identify which imbalances are going to become areas of interest that we're going to want to trade. So just like I said earlier, you have to take into consideration the market structure and the directional bias of the trading day. So of course, if we're moving lower and we're creating lower lows, lower highs, then we're going to have a bearish bias or bias to the downside. So it's unlikely that we're going to fill these imbalances out immediately. Just like how when we had a bullish bias and we were making higher highs, it was unlikely that we were going to fill these imbalances out until we broke structure, which is why I didn't get involved on, let's say, a short here, right? Because we did not break structure yet. I waited all the way till this area, right, where we took out these lows already. We took out all the liquidity down here and then traded below this order block, which I saw as an important point or a structure shift. And then now we were bearish. So that's when I get involved in a short to target these imbalances. Sure, you can trade imbalances like I showed here, right? Where we form an imbalance and then most likely price will pull back to fill this imbalance out. That's definitely tradable. You could have made profit from that, right? Like that. But the problem is you don't really know where to put your stop, right? We just took out the highs of here to taking out that liquidity. So you really don't know where to put your stop, or you could target obviously to fill out the imbalance. You could have went with a 1-to-1 risk reward, but that's not that great of an RR. So I would suggest not solely trading off of imbalances, because a lot of the times if there's an impulsive move like this and you're trying to trade imbalance alone without taking into consideration liquidity and price structure, you'd likely be targeting this. And even if you had to 1-to-1 stop, look what's going to happen. You're going to get stopped out. And price probably will eventually fill out this imbalance, but when we're in a strong trend, it's unlikely that we're going to pull back into this area to fill it out completely. So I would eventually be looking at a long, right, if we do trade up into a bullish bias into this area again, looking to fill out these imbalances. But I always have to take in consideration my risk to reward and just the market structure. So then how would you trade on imbalance? Well, I already laid out two examples, or this is a better example here. That one was more of a liquidity trade. But essentially, we can look back in time too. So when we formed these imbalances out here, I anticipated that we were going to trade back into this area because we had already taken out the daily highs and stuff, and it looked like we formed a nice area of imbalance here, and we created a bearish order block, which was forcing price down. So I essentially just targeted these imbalances and took my trade. And then the reason why I closed it out here and waited again to enter was because there was more imbalance down here and also more liquidity. But I needed to see that this was not just a retracement, because this trade was more of a counter trend trade, retracement trade, where I was kind of just taking a trade which I thought was likely to play out. Right, it would return to equilibrium, which is the 50% level, and I took it just below, just in case that we continued up. So I already took my profits here to be safe, right? And this was already a 10R trade, which was absolutely insane. So I didn't need to push my luck even more. I was already happy to get out of the trade. But then when I saw, right, when I saw the bearishness, when we traded into this bearish order block again, and we didn't break it, we traded lower, I entered again. And then targeted all these imbalances down here, which eventually got filled. And then we moved higher, right? And then here, again, this trade was also partially based off of imbalance. I entered on a bullish order block, which we formed there. And this was also an accumulation, right? So just take all of my concepts together. I usually just, you can use everything together, right? On the 1 minute, look at this beautiful accumulation. We formed a spring. I entered here. And this was also, a spring is pretty much just an order block. And so I entered here. And we targeted these highs, right? And took profit here, right? Because I know that even if we continue lower, most likely we'll first come to fill these imbalances out, right? These imbalances out. And then make our move either higher or lower. So even if price moved lower against me, I would already have scaled out a lot of my position and moved my stop to break even before getting stopped out, and I still would have made a profit. So that's how you guys can use imbalance to not only figure out where price is likely to go to, but also where you guys can take profits at, and how to scale out and stuff like that. And yeah, including my liquidity concept, I thought price was likely going to take out the highs of the previous day. So that was the last take profit, and eventually got hit. And then again, I took another trade because just look at this massive imbalance. Even though we had a massive impulsive move down, creating a lot of imbalance, we did not break lows. Rather, we actually traded up again, and I actually took a entry a bit earlier because I saw that we rejected this order block to move higher. Eventually, we went lower to take out some liquidity, but then again, we did trade back up and fill out these imbalances before taking out the previous day's high. And yeah, this week has been a great trading week, and I expect price to return to this level to fill out these imbalances. And if we become bearish, most likely we will go lower. But yeah, right now it just looks like this move, which was also propelled by short liquidations on BTC. This was an insane move, right? This massive candle was a lot of market order longs by institutions, as well as a lot of smart money, institutional money that was taken out of their short positions and liquidated. An imbalance zone or liquidity void, and discussing the actual logic that goes inside there really in depth on kind of a micro scale. So if you're interested in that, subscribe and like this video. I'll probably drop that after I finish this series on just the basics of institutional trading, because that will take a lot of time and preparation. And I'll probably wait until I have quite a few more subscribers before I drop that value bomb, just because that'll probably be the most in-depth video on imbalance on YouTube, and it'd be a waste if I just dropped in and got like 50 views or 100 something views. So yeah, stay updated for that, and subscribe and like for more, and happy trading, guys. I'll see you next time.